Hello everybody, welcome back. This is going to be episode number 13 of the Trading Bootcamp series, and in this episode we will be diving into what are mechanical models. We will look into what it is, how to turn any strategy into a mechanical model, and at the end I'll show you an example and a backtest of my PO3 mechanical model. And yeah, I hope you guys enjoy this video, and let's continue on with the video.
Alright, so as you've seen from the intro card, we are going to be looking at what is a mech model, aka what is a mechanical model. So to start things off, you gotta learn that a mechanical model is a list that you have to follow. Now, what do I mean by a list? The list can be a list of your strategy that basically tells everything about your strategy. Now, this may be a little confusing, but what do I mean by this? So a strategy has a set of rules, a set of specifications, a set of limits that you have to follow, and basically with that list, you basically guarantee yourself that you are going to follow those that your strategy, that you're going to follow your plans without having emotions regarding it. So instead of trading based on emotions and based on what appears there, you trade on what your strategy says and 100% dependent on your strategy. So that's a little bit simple to understand. It's just the application that may be a little confusing. And the second thing that you need to know also about the mech model is that the mechanical model is a type of strategy where you take out 99% of your emotions. Now, why do I say 99% and not like 100%? Because there are always going to be that 1% of emotions that can still get on your way, and that thing can really mess up with your strategy. Henceforth, why you need the mech model, actually, why you need the mechanical model, because the mechanical model basically takes out everything of that that relates to emotions, everything of that fear of missing out stuff, everything of that, just because you're following your strategy. If it appears there, then you're good. If it doesn't, then you're good as well, because tomorrow there will be another day. You know what I mean? And then the third thing is that the mechanical model is a list that cannot get disrespected or broken. So, for example, you cannot disrespect or break this mechanical model because the mechanical model is basically your strategy. It's your strategy defined into lists, and that list has topics, and you have to follow those topics independently of what is happening, of whatever is going through your life, whatever. You need to follow that with extreme precision and little to no flaws regarding emotions. Now, you got to make sure about the news, because news may affect the mechanical model, but that's another topic. Now, let's look into how can you turn any strategy into a mechanical model. Now, this is actually really important because every strategy has a specific mechanical model. There are some strategies that can get the mechanical model straighter. For example, it can get you better with the mechanical model than other ones that may be like faster to comprehend the mechanical model than others. But I mean, you can do a mechanical model with every single strategy, but first you have to learn everything about the strategy. Now, when I mean everything, is really everything, like every exception, everything that happens, every backtest session, every live session that you did, you have to mark everything down. You have to have everything marked out on your notes in regards to knowing what your strategy is. For example, your strategy may be really basic, but sometimes there are things that are going to contradict your strategy. Therefore, you need to plan out that on the mechanical model, you see? And then also, start small by creating a checklist. This is pretty simple. Now, what do I mean by a checklist? Now, for example, before I created the PO3 mechanical model, I had a checklist, which is basically a smaller version of the PO3 mechanical model, just because the checklist has basically steps that I could check out and not check out. This is basically like a list. Is basically like some kind of list, and you have this little thing. For example, is there a manipulation? And you click on yes. Is there a inversion fair value gap? You click on yes. And yeah, that's basically it. That's basically what my checklist was. But the issue with the checklist is that it may be a little confusing, because the checklist actually requires your thought process. And what do I mean by this? Of course, every strategy, everything needs your thought process, because, I mean, you're human. But what do I mean by the checklist needing a thought process is that you have to basically say if there is that and there is that. Whereas in the mechanical model, you just see and you identify clearly with no mistakes regarding if there is a thing, if there's like a confluence or anything that follows your strategy. I mean, you know it's there. without needing the regards of like your opinion and your, well, the market is looking so maybe I check this off, but I don't know, I'm not sure. That I'm not sure can cost you that trade. That's just what I'm saying. And with the mechanical model, that basically goes away because, as I mentioned, 99% of all emotions get messed up, aka they leave your brain. Sorry, let me take this out. All right, now the third topic is to move on creating every single step and detail that you need to know. This is basically moving from the checklist up to the actual planning of the mechanical model. Now this is really simple, is like after you back tested, after you live tested every single aspect of your strategy, you can move on to creating single step and details, like every single detail, every single step that you need to follow, basically creating that list that I mentioned. And I'm going to explain how to create that list right here. Now, this is actually a picture that I took. This is on my wall right here on my right. And I didn't want to show you guys my my writing because I believe it's pretty bad, yeah, and that's just me saying. So I took a picture and sent it to ChatGPT so like it could do me a little bit better, and it still came out with a lot of flaws. So basically we're not done yet. So let's look into my PO3 mechanical model. So as you guys know, I trade the PO3, and wait, I can't actually click on this because the text will disappear because ChatGPT actually said a lot of things that were wrong and I had to like put things over it. So I'll just like point it to the same line as it is right here, for example. So the first thing that I have to do is the market maker model clear. This can be a market maker buy model or market maker sell model. Is it clear? If it's clear, then wait for New York Open because that is when I trade. If it's not clear, then no trading because the market maker model is my bias. Now, is there a clear gap? Is there a clear gap? This gap, I usually have the 15-minute because it's 15-minute formed from New York session, which is a session that I trade. And if yes, are there any good draws on liquidity? This is basically separate. So, for example, is there a clear gap? Yes. No, yes. Is there a clear gap? No, yes, no. This is separate, okay? Just keep that in mind. So let's start with the yes. Are there any good draws on liquidity? This is based on the market maker, let's say the market maker buy model. You'll have this little, I said the market maker buy model, right? So it's the opposite. So you have like these things, which is called a sell side curve. Then you have all of these liquidity points and also the consolidation target above right here, which can be used as targets. That is basically my draws on liquidity, and they are my draws on liquidity on that curve. Now, is there any draw on liquidity on that sell side curve if I'm using the market maker buy model? If no, then no trading because the PO3 involves liquidity. If I don't have liquidity, then the trade is not valid because I'm going to get either stopped out or exhausted and basically a loose trade. Now, if yes, is there a change in state delivery? This is wrong. Is there a clear, this is not CISD, sorry, ChatGPT is wrong. Is there a clear PO3 setup? If yes, is there a clear change in state delivery and inversion fair value gap? If no, then no trading because I trade with both. And if I only trade with the change in state delivery or the inversion fair value gap, it usually means low risk. And I have to have the clear PO3 setup. If yes, then is there room, this is wrong as well. This is if you're facing exhaustion. If I'm facing exhaustion, which normally happens in December, November, January, maybe even, it stops at around Q2 and Q3. It stops, but from Q1 and Q4, there's a lot of exhaustion present. And if there is exhaustion present, is there an SMT or liquidity sweep to actually kill exhaustion? This is believe I showed this from my PO3 back test. I'll put it right here for you guys to see. And if yes, trade normally. If no, low risk or even no trade because I hate exhaustion. Now let's move on to this side. Are there any good draws on liquidity? No equals no trading. as always. And yes, is the manipulation to a 5-minute or a 15-minute? So I usually trade the 15-minute fair value gap formed from New York session. But if there is no 15-minute and I actually trade from the 5-minute, there has to have impulsiveness. This is written wrong, I believe. It has to have impulsiveness, because if I trade on the 5-minute, I need to have that change in that inversion with at least 5 candles, or else I'm not trading. And if there is a 15-minute, I wait for the same thing as here, a change that is a delivery and a inversion fair value gap for me to trade with a clear change liquidity sweep. I mean, this is basically to eliminate the Jewish fake out, but it's not mandatory. But yeah, it's basically the same thing as here. Is there a change to delivery and inversion fair value gap? If yes, then trade normally. And that is basically the mechanical model. You can make it yourself. Now let's look into an example that I have right here, because while I was back testing, I actually found this and I believe it was a really good spot. So we are on the daily time frame. So let me mark out. On the daily time frame, we have this previous day high, and we also have this other previous, it's not previous day, well, you get what I mean. And then after right here, you got what is called a market maker buy model. And this is, this is a sell model, because this is a sell side curve. And then you have a touch into a PD array. I believe it was an imbalance. And then you have a rebalance, aka curvature to the buy side maker. Oh, shit. I mean, I have this new keyboard. Shit. I have this new keyboard. This shit is messing me up. What the? Sorry for this. So you have the sell side curve right here, and then you have the buy side curve after touching the PD array. Now, what are we looking right here? Since price has already swept this previous day high, I believe I'm not looking to take this as an entry. I want to see this swept, but I mean, we could still take an entry. But is the market maker model clear? Yes, it is clear, because we are on, what is this? This is a buy side. This is a buy side curve, and basically what I'm expecting is either we get a fair value gap down lower, and then for example, New York opens, I believe it's going to open right now. It opens, it pushes a little bit down, it pushes up. We have the 15-minute right here, and then we take the trade for the previous day high. And if that doesn't happen, sorry, I have to clean this because this new keyboard, I still have to get used to it. And if that doesn't happen, then I'm either going to look for an entry up here once it takes this previous day high and then goes back to these lows. That is basically, this, because I trade the power 3 for value gap and then boom, go down again. Now that is what I like to see, and what I would like to see. But let's see what we have in store for us. All right, so as you can see right here, let me show you on the daily. Yeah, I think we can see on the daily. So on the daily, previous day high got swept already, as you guys have seen, and this previous day high has been swept right now by New York Open. You can't see really well, but it's 10 a.m. And this basically indicates that I'm now, and also you can see this huge wick. And now what I'm looking is for this, and this to target the consolidation of the buy side curve low, which is going to basically be this low over here. That is what I want to target. Let's see on the 1 hour. Yeah, it's right here. No, sorry, my bad. This is the real one. This is the real buy side curve, buy side low of the consolidation, because you see consolidation, and then you have the buy side curve. Now, as we swept as we touched the speedy array, I'm now looking for a smart money reversal to the downside. And with that smart money, I want to see a fair value gap, and then a touch, and a straight and then a straight flush to my TP or my take profit. Now let's see if I have the fair value gap to the downside, so I could use as a potential manipulation point. All right, so as you guys have seen, let me put on the magnet. So we have this 15-minute created by New York session, because it's 10:32. I believe you can't see because it's cut, but this is basically a 15-minute fair value gap. And now what are we looking? we're looking for a retest, basically a rebalance up to here or a manipulation, and then we can even use this as our break even. And then with that, we want to target these lows right here. Now let's see if we have that rebalance above. All right, still waiting. All right, and then we get right here, the rebalance, price touched, and now what I'm looking is a change in state delivery and an inversion for value gap to take as my entry. All right, so here we got, what have we got here installed for us? So this is our 1 minute inversion for value gap, as you can see, 1 minute IFVG. And as you guys have seen from my change in state delivery video, this is a change in state delivery because it is a candle body closure below the candle body that formed the impulsive move up or down. And then what we have, we enter right here, stops at this high. And what do we target? This is going to be a huge trade. And especially, so look, our break-even point did not get hit, so which is really good. And we basically want to target all of these lows right here, basically for a 1 to 12. That's crazy. Now, let's see if we can catch this. Boom, big impulsive move to the downside. Now I want to see a break right here. Bro, my break-even point just got hit, so I'm now going to move my stops to break-even, and let's hope that we get this trade on good, because I normally don't like to get break-even. Now let's see if we have. Wait, let me actually fix this a little bit. Okay, you guys can see what is happening right now. So let's actually move to the 15-minute. All right, big the displacements to the downside, and we got edged. Yeah. So it basically exited my position right here, which, as you can see, is from the buy side curvature, the consolidation range of the buy side curvature curve. Sorry, you got the low. So to recap, to summarize this, you have the consolidation, and then you have this low that you can use this low as target. And then you have this sell side curve, and what you have, consolidation, and then you have the buy side curve, touch of the previous day high, basically a touch of the PO3, and then you get touch into the 15-minute, and then you deliver down into that liquidity point. So that basically checks out my MECH model, because one, we had liquidity, which was the target below right here. We had a liquidity sweep, which was above right here. We had a clear PO3 setup. The market maker model was clear. Tap into the 15-minute, impulsiveness, and a good trade. And yeah, I hope you guys enjoyed this video. And if you want to learn something new, if you want to learn something else, drop down in the comments and I'll read every single comment. And yeah, God bless.